10 years interest-only loans, lifeline or a loaded gun for Aussie investors? What if I told you guys there's a home loan out there that lets you pay zero principal for the first straight 10 years? That's right guys, 10 years interest only, not 5, not 3, but 10. Because just recently AMP just dropped a 10-year interest only loan, and honestly it feels like the financial equivalent of handing out a red cordial at a toddler's birthday party, you know what I mean. Like, it sounds like freedom, right? But what if it's just a longer fuse on a bigger bomb? So today in That Property Roast, in this episode, we're unpacking the dark promise of these 10-year interest-only loans and what AMP is offering and why now. Also, we're covering the upside of this product if you're strategic, also the traps if you're not, and how this changes portfolio planning, and also why, depending on your moves, this could be the best thing you ever did, or maybe on the flip side it could be the worst thing you ever did in your bloody life. So buckle in guys, this one's gonna get spicy. So firstly guys, the offer is AMP's 10-year interest-only loan product. Now this product has been out for a few months, and some of my clients have inquired about it, and some of my clients have been on it. But the question you might be asking before you guys call me and go, hey, get me on that 10-year interest-only loan too, is how does this compare to the 5-year interest-only period product at the moment? Now, to quote AMP product executive, quote, they say, we designed this product to give borrowers more flexibility in uncertain times, end quote. But to counter that, according to the Financial Council of Australia, they say, quote, this could encourage riskier borrowing behavior, end quote. And guys, this is my take. Interest-only loans are like tequila shots. Like, a couple can be strategic, but a dozen of them, you're basically walking up to a ditch with a negative equity hangover. But anyway guys, let's not be too negative, because let's look at the positive side of this product first. This leads to my second part of the video, the upside of an interest-only loan for 10 years. So right off the bat, we're talking about cash flow and strategic breathing room. I don't know whether you guys have used these before, but interest-only loans, they improve cash flow. Like, it's that simple. For example, if you're paying a 6.5% interest-only loan on a $700,000 loan, the monthly repayment will equal $3,792. Now, on principal and interest repayments, that's $4,988. Now, if you do your maths correctly, that's about $1,196 extra per month in terms of the difference. Now, if you do your maths again over 10 years, that's exactly $143,520 of cash flow freed up. Like, what I'm trying to say here, guys, is that money could have went into an offset account, renovations, or even a deposit for another property. Now, to quote Property Investment Professionals of Australia, they say, quote, these types of loans help maintain liquidity during volatile cycles, end quote. And guys, I know this is a plug, but I've talked about this a lot in my book, Keep Calm and Mortgage On, which is Amazon's bestseller for finance education. But for you fans out there, you probably know that, but let me move on. Because to counter my previous point, SQM research says, quote, it's a strategy only for those who understand the risks, end quote. Like, for example, I had a client who locked in an interest-only loan on a dual income property in Geelong, and he used the freed up cash flow to construct a granny flat. The rental income from that property jumped from $700 a week to $1,200 a week combined with the granny flat. And based on that, guys, this is my savage opinion. Interest-only loans aren't evil, guys. But if you misuse them and you're idiotic about them, then yes, you're gonna get cooked. Thirdly, guys, let's look at the negative side of interest-only loans, or even a 10-year interest-only loans. The trap. Like, most of you will say, oh, if I've got an interest-only loan, I'm just like kicking the can along and I'm just digging myself a bigger hole that I can't get out of. Because technically, if I pay interest only, I'll never pay off my loan in 30 years. Because here's the thing, guys. If you're not building equity through repayments, then you better be building it through capital growth. Like, you know what I'm talking about, right? Otherwise, you're just a tenant with a title. Because when the interest only period is over, the debt that you have, the mortgage, is still 100% staring down at your face. I mean, to quote ASIC's 2024 housing report, they said, quote, interest-only borrowers may struggle with higher repayments when terms expire, end quote. But then to counter that, according to Smart Property Investments, they say, quote, interest-only extensions give time for repositioning portfolios, end quote. So again, guys, it depends on how you use it and how you use it strategically. For example, guys, I had another client in WA, Western Australia, who took an interest-only loan on a unit that flatlined in value for over 6 years. And right now, the interest-only period ended. And as expected, the rent that he was receiving didn't cover the jump to the principal and interest repayments. And just last month, he had to sell it at $42,000, which is a loss. Like, I'm telling you guys, that is the real risk if you got it wrong, right? You're just buying time, but it's not a bailout. Fourthly, guys, in this video, we're going to talk about how to use interest-only loans in your portfolio playbook. And actually, who should even consider this 10-year interest-only loan product? Because I'm telling you guys, not all interest-only loan borrowers are equal. Like, here's who I think this could work for. For example, the equity-rich clients that are time-poor investors. You're not desperate, but you're very strategic. Or for example, you're a builder or you're a renovator. And by doing interest-only loans for that long, you can use the free up cash flow to reinvest elsewhere. Or for example, which I'm doing this on a very popular basis, debt recycling or recycling debt. Like, what you can do is you can use interest-only loans on existing assets while going on principal interest on new ones for faster leverage. And if you don't get that, I suggest you book a call, because for me to explain that, it's going to take me another 10 minutes on this video. I don't want to drag this on. Like, all I'm saying right now, guys, is it all comes down to the sole purpose test of your portfolio. Like, are you growing your portfolio? Are you holding your portfolio? Or are you offloading your portfolio? And guys, this is my savage take. If you're using this loan just to survive, you're ready to don't even do that. That's dumb. Like, I'm talking about this tool, this AMP interest only for 10 years. This is for people who have financial advisors, accountants that are giving them the right advice to do it strategically. This is not for panic buyers who are like, oh, look, I'm struggling to pay repayments, put it on interest only, and yeah, I'll somehow find a way to pay the repayments when it goes on principal interest. This is not for you guys. So if you watch thus far, here comes the property roast. The mobs in Canberra, they say they want affordability, right? But the moment the banks offer a cash flow saving product like this, they get scared and think, oh, it's going to cause a property bubble. Everyone's going to jump in, interest only, no one's paying off their debt. And meanwhile, because of the bloody government, the regulators punish interest only borrowers with high rates. As you can notice, principal interest rates are lower than interest only rates. Like, what I'm trying to say here, guys, is the system doesn't care about your outcome. They don't care what you're trying to achieve. They just want to risk profile you and make sure that you're not too risky for the system. Like, what I mean by that is they don't want you to crash the system and then somehow they get in trouble, the police get in trouble, right? And then the media goes onto them, right? They just want you to play it safe. But sometimes playing it safe to a rigged system is going to be at your detriment in terms of growing your generational wealth in your family. So guys, this is my closing perspective. 10-year interest-only loans are like tactical nukes. You use it correctly, you break through those financial bottlenecks, right? But if you use it poorly, you blow up your own balance sheet. That's simple and clear. So right now, if you're sitting on capital-rich properties, but somehow you're bleeding cash flow, this might be your oxygen mask. But again, no financial advice. But if you do want holistic lending strategy, or you do want financial advice from our financial advisors, I do suggest you book a 15-minute strategy call or a 60-minute deep dive for me to create a holistic game plan for you and connect you with my financial advisors, my accountants, my buyers agents, and those that can help you build a property A game for you to escape the rat race and build generational wealth. But again, if you're not ready, hit the like button, hit the follow button if you want more videos like this, and most importantly, smash the share button. Share this to your mates, because knowledge is power. And until next time, I'll see you in another episode of That Property Roast.